All right, good morning, everybody. Let's go ahead and get started. Welcome to the Yummy Market Review. Let me know how the audio is doing, and while you're doing that, I also will wish everybody a very happy Thanksgiving tomorrow. All right, hope everybody's doing good out there. All right, so let's see who we got here. Marone, how are you? Lewis, Frank, Ellie, small room today. Holiday, right? All right, hey Lewis, by the way, I got a message from support. They sent you your activation key on the TLM you just purchased. It may have ended up on the original. It may have ended up in your junk spam box. So always be sure to check that. That goes for everybody. Anytime we send an email, especially with a code or a link, sometimes those end up in the junk email. Okay, so hopefully you got it. I know they responded to you as well. And yes, we are recording. Okay, so we're all set there. All right, so let's get into it today. All right, first thing to go over are the risks involved in trading. I think everybody knows there's risks in trading, of course, and we want you to be aware of that. There's many different types of risks. Check with your financial advisor to be sure any of the stocks we talk about. Know your risk, talk to them all about that because they know your situation, of course, better than we do. And then also too, always trade with money you can afford to risk, okay? I think that's really important. That's called risk capital to begin with. All right, and if you need help in the money management area, I've got two great books on that. I've also got books on the Elliott Wave, The Art of Trading, second edition's coming out. That's my newest book. Pretty happy about that. I think it's gonna be one of the best books I've written, so you may wanna check that out on the pre-order. And that, of course, now takes us to, let me enlarge this, the economic announcements. Okay, so FOMC basically was yesterday, and they're saying rates will probably stay flat, I think, for the rest of the year, but they're not going to probably go down for a while. Probably not going to see them go down until next spring, if at all. There's quite a bit of back and forth on this. Some people think they will have to raise rates. Some people think they're keeping them low for political reasons. Who knows? But in any case, the market liked what it heard, and it is in rally mode, whether you want to call this a Santa Claus rally or a thank goodness the Fed has kept rates at least flat rally, you know, that type of thing. All right, so for today, NBA mortgage apps, durable goods, jobless claims, consumer sentiment, EIA, and both natural gas and petroleum. And the Baker Hughes rig count is today, not Friday. Okay. Thursday, we have nothing. Okay. Thanksgiving, of course. And then Friday, PMI. And don't forget the New York Stock Exchange closes early on Friday at 1 p.m. Eastern Time, Fed balance sheet, OPEC meeting, and that's pretty much it. So I guess the news this week really was the FOMC. Any thoughts on interest rates going forward? Do you think they're going to go up again in the next year or so, or do you think they're going to remain flat? Do you think they're going to come down, and if so, when? So definitely, post a little comment in there, whatever your feelings are of anything you may have read out there as well. All right, when we look at charts, of course, we're going to be using the software I created over the last 30 years. It actually came out in 2003, but I had been trading many years before that and worked on creating a trading system. And I actually managed money way back then. And many of my clients in my fund basically were asking me, how do I do it? And that's how we decided to come out with the software. TradersCoach.com, a little history. When we first started it, back in the 90s, there wasn't that many bells and whistles in terms of websites and things like that. So basically, I worked for one of the big wire houses and traded an account there for high net worth individuals and so forth. And we would have a meeting every weekend on Sunday to go over how, our trades, what our trade decisions were going to be based on that week. And it was all based on the software tools I use now. And the idea was pretty much texting, because there was no real webcams back then. It was just a very simple website. There were forms there where they had to, sign liability exclusion forms, and agree to a trading environment type of scenario and all that kind of good stuff. And that's what TradersCoach.com was really all about. And then we got into coaching, okay, and did that on a one-on-one basis. And then finally, when technology improved enough, the demand was there to create software tools. So we were one of the first major software providers back in then, because we programmed for all the platforms that were popular back then. And then we were even around before I think Ninja was, and then Ninja came out, and we got to know the owners of Ninja at that particular point. And we were the third, I think, Jeannie, correct me if I'm wrong, the third software company to program for NinjaTrader.
That is correct.
I think that was about it. And so we did all the trade shows. We would stop over to the NinjaTrader booth and also the TradeStation booth. We were big with them and do presentations for them and all that kind of good stuff. Then the internet developed even further, and we got, they didn't really do as many trade shows. The trade shows really weren't that well attended, so to speak, after a while, especially during the crash of 2007 and 8. So everything pretty much moved online. Technology increased. So, people do that. Now, we do a summit once a year, and we're going to be doing that. Jeannie, what date are we looking at for that? Is that, what, February, or when is that?
It's going to be February. We're doing a Valentine's Day Summit, although it may not be on Valentine's. It'll be Valentine's week. And for anyone who loves trading and loves
Well,
the environment of the markets, February.
Okay, so about sometime in February. We don't really know the exact date yet, so we'll keep you posted. But basically, it's a 2-day event. You come in, and by the way, it's going to be in Arizona, and the weather is perfect in Arizona that time of year. And so you can come on in, get away from your snowy area or wherever, and join us for 2 days, and we cover the live markets. We pretty much go into great detail, and it's a really great time for me to meet you, and you walk away with some excellent content. We share some inside secret tips on these things that we usually don't share online. So if you want to get the inside scoop, that's not a bad place to come, okay? All right, so let me see. Any questions coming in here? Frank, I love your comments, okay? Let's see. Extended, yes, hyper extended, Frank, that's true. Okay, good. So happy Thanksgiving to everybody as well. I see a lot of that. All right, so here is the chart on the Dow Jones Industrial Average, dissected a little bit. And pretty much, no real difference. I put in a new bearish support level here, since that was a pretty nice bounce off there. The top, what we're watching here, let me just back up for a minute for those that may be new here. Okay, so back in 2022, the market put a high in. And don't forget, this is a daily chart you're looking at. So this is a wave 5 on the daily, but it was also a wave 3 on the higher time frame of the weekly chart. And then you could clearly see the waves down here for the 5 waves inside a wave on the weekly. So this is a weekly count that we stuck on I stuck on the daily chart. I always say we because I think of TradersCoach.com, and rightfully so, is both Gene and me. So, but basically I do all the drawing on the chart, so I should say I. All right, and so that was the change in trend that you get after a wave 5. And then we had an ABC correction for B wave. And then we thought we were on our way big time for C wave, but no way, it failed, it stopped there. So in terms of looking at C wave as a long-term C wave, it should have gone down into the teens. That's why we call this a fail, because it came nowhere near the normal fib retracement on the long-term charts. What we're kind of waiting to see is, was this a minor pullback? In other words, was this failed C wave, maybe failed on the weekly, but it could be a C wave minor completed on the weekly, and therefore we're going to go up and complete wave 3, all right, up here. That's possible, all right? Don't think it, I'm not on that camp yet. People say, well, do you think that's going to happen? And from a probability standpoint, I'm not going to say that is the scenario until we get above the all-time market high of 36,952, and we haven't gone above that. So currently, once this failed, and we had a top put in D wave here. So now we're waiting to see if D wave is completed or we're going to get another D wave high. That's where we're at right now. So if you remember, I said until we break this support level, I'm not going to call D wave over. And this is why, because it could go up and make one more high and not go above the market high, okay, and then roll over at that point. So we are in a long-term complex bearish correction. And when you get into a long-term bearish correction like this, it is difficult, it is chaotic, and it is messy. And that's kind of what we're experiencing at this point. So, you know, the market's currently now, this was done on Sunday, we're looking at a high right now on the markets of, well, currently right now around 35, it's at 243 for today. So, you know, it's getting close to the upper portion of that D wave, but so far it has not, I do not think, broke it yet. All right, so we'll see. The week's not over, so we'll see. The other thing too is if we go below now, if this thing curls over and this holds and we drop down, then we want to see if we get below this support level and probably get a rebound, and then we'll get some type of bearishness if it's going to continue on down below that major bearish support at 31,429.82. All right, E wave. If this is indeed an E wave that's unfolding and D wave top is in at this particular point, then we should not go above here. Okay, instead we should eventually at some point roll over before then and start taking out these support levels. And if we take out the bottom here of C wave, then we know pretty much for sure that this is a long-term major complex correction heading down into the teens. All right, so that's kind of where it is now. Notice even though we've had all this bullishness, all right, we're still kind of in more of the same area, okay? So more of the same area now is between these two levels. So that's kind of where we're at now. All right, so that is kind of, you know, interesting. We're just going to have to wait and see what the market does here. It certainly is strong, all right? This bullishness is very, very strong, but it is meaningless to me unless it goes above the D wave high, because then I have to redraw a D wave and move it over and keep an eye on the all-time market high. Now, if we go above the all-time market high, then the long-term complex correction comes off the table, all right? And now we are still in the last leg up of wave 3, all right? Which means that that'll eventually end and go into a more significant correction at a much later date, okay? So that's kind of where we're at now. Any questions on that? And this is my hypothesis, you know, my opinion based off my analysis, my theory. So, you know, there's many people that think the bullishness will continue. And I have to be honest with you, I kind of like that sentiment, because there was so much talk of the market going into a major correction that usually when there's that much talk about it, all right, you usually don't have that type of feeling just before a major sell-off. In other words, usually people are all sucked into the market and they're really happy with it, and then boom, get hit with a major correction. So I guess what I'm saying is when everybody's predicting a correction, you don't get it. When everybody's predicting a bull market, you usually get the correction. And so when we were in this area here before, they were coming on saying, okay, we're going to go straight down. And it certainly seemed like we were going to, but it always concerns me when we have more people pessimistic and predicting a bearish market than those predicting a more highs in the market, okay? Kind of like that type of situation, you know? So we kind of want to see some greed in the market, and Frank is even indicating the greed levels are pretty high. And I like to see that. because that is usually something that you need in order for the market to really sell off. Okay, markets love to pull people in and then do their thing, right? So I think maybe that may be something that could be happening now. Even if we take out the high D wave, as long as we stay under that market high, all right, I'm going to stay with the bearish camp. But I think you'll probably see some very bullish people coming into the market. And if they're right, then the market will go above the all-time market high. Okay, if not, then we'll see probably a significant sell-off at some point. I do not see it, this sell-off really taking any legs now through the holidays. All right, usually historically, and I do look at things historically, you don't get any type of major sell-off this time of year until after the holidays. Okay, so I think we're probably going to be good through another month or so. So I don't see anything very dramatic occurring before then. Of course, I could be wrong. All right, now here's a possibility here, okay, in that this is the 60-minute chart. So we had this bottom here, and this could be a wave one inside the larger E wave, okay? And this could be an ABC correction we're experiencing inside the E wave as well. So think of this as the first leg down of that E wave. Let me go back a chart just so you can kind of maybe see this, because it's kind of a little bit interesting here. So basically what we're saying is that if this is D wave here and we're in E wave, this could be the first major leg that we're seeing, and then a rollover like that. Okay, so this could be a 1-2. And then if you look at the next chart over, this gives a little bit more of the inside look of the 5 waves inside this move down, and that would be a 1 possibly, and then the ABC correction here. So, this is a pretty clear ABC. So that's kind of interesting. I could see that much more than a 1, 2, 3, 4, 5 major. I mean, we can have the 5 waves inside a wave, but I see that pretty much as a clear ABC, which makes me think that we may not take out D wave, okay? But we'll see, okay? We'll see. All right, and that is that bad boy. And then, of course, I also now like to include the Case-Shiller index because, and I look at this every week. I get the updated chart, but it doesn't really change that much, to be honest with you. But it will over the course of a quarter, but not really every week. Maybe a month or so it will. But this is the Case-Shiller index here in the red line. This is the CPI. The main thing when all is done is when you get the Case-Shiller spread from the CPI wide, it usually is an indication that we're at a bubble, okay? And so this was the financial crisis of 2008, and then it works its way down. So we're kind of at this bubbling area here, but you can stay up here for a while, but eventually, if history is correct, and it's quote unquote not different this time, we should move back to some sort of mean closer to the CPI. And so if you believe that that usually happens historically, and it has historically, then we're due for some type of pullback in the housing market. And so maybe that will correspond next year or something with a pullback in the stock market at some point. Now, a lot of people, real estate's a funny animal because it's very local. Okay, it can be doing great in one area and not so great in another. So it depends on the area, of course. But the other thing too is that if the market slides, we go into a recession or something, or things get much worse, you'll see real estate pulling back because basically people that are holding out, not selling because they are enjoying their low interest rate loans that they got, may be forced to sell if they lose their job. And an increase in supply will cause that to come down because if people are losing jobs, chances are the demand's not going to come up. So, basically it's where demand meets supply, right? Just like anything else that we trade. So that's kind of my thoughts. If you have any thoughts on the home pricing situation, let me know. but it's kind of an interesting situation. It's amazing to me that it's held this high for so long. Very unaffordable for most people at this point. New homes are doing okay because they can buy down the interest rates and make them much more appealing and affordable. But again, it comes down to job stability here too. Okay, so that kind of thing. All right, let's come out of here and quickly take a look at the Dow. Lately, you can see up here where we got this high here sitting for the D high, so we're not there yet. This is the target we had for this move down on both time frames. So if we look at some of the inner workings here, okay, on the 60-minute chart, we still have some bullishness. But what's interesting here is that, bearish divergence we see, amongst the ABC correction. We also see here a yellow PTF now, the green's gone. So that may be an indication we're getting toppy here. This is pretty strong. So it's very possible we could come down a little bit, make a hook, and come up one more time. And then we'll see if that D wave holds. All right, so that's very possible, could happen. Or it could make the hook, come up one more time, and hook down. All right, what do they call that, cup and saucer or something? I don't know, something like that. But that is very possible as well. On the long-term chart, we have some bearishness still there, apparent. So that has not, this bullish run has not yet affected the long-term charts that much yet. All right, if it continues, it certainly could. So I'm thinking it's kind of going to get interesting here, kind of a little bit of a nail biter to see if that D wave holds, but it just might. Okay, so let's keep an eye on that. All right, let me just quickly also go through some of the favorites here. First one I want to look at is USO. Okay, so this is the ETF for crude oil, and boy, has it come down. It's pulled back. In the long-term charts here, all right, we still have a bottom here that's holding. So we still think it's going to pop up off this. I don't think we should go below this, but we're right at the inflection point now. But it looks like it's still heading down. So this could be a pretty good pullback, still in progress. Maybe one more leg down on this one. But we'll see if this bottom here holds. Okay, that's the 4, 3, 5 of some degree going up there. So my target for oil after this move down is finished is between 98 and 123, and we're at 69 and a half roughly. Okay, so that's kind of what I'm thinking there. All right, let's see. The other one I want to look at is the cryptos a little bit here. Let me just bring those up. Then I want to look at gold, silver, and one of the housing markets. All right, so cryptos still doing good. They're due for a correction, a profit-taking correction. I'm bullish on this long term, okay? But for now, I see bearish divergence building in the 60-minute chart, which means we're getting a little toppy. All right, very strong here still. Green PTF here on the weekly. But you could go in for a correction here very easily at any time, okay? So we're gonna keep an eye on that. If you're not in crypto now and you go in now, you have to be there for the long term, because I think any trade short term now is extremely risky after the recent run up. Because if there's any profit taking, you'll get stopped out on those time frames. So, if you're in it and you're in it for the long haul, keep your stop, probably under this pyramid here, or the second one back at the very least. But I think this pyramid here on the weekly chart will do it. Just keep it there, okay? That should survive any short-term pullback. All right, and then silver is the next one I want to look at here. Silver, basically, we were kind of in I think we had this drawn as a pennant at one point. I guess that got erased, but there is the pennant alignment here. Let me draw another one in here. And basically, let's use this at this particular point. So we kind of got some pennant there at this point. It broke down an earlier pennant here, but now it's back in it. So that's the new pennant. We got a red PTF on the daily, a green one on the short term. So kind of interesting. So going up a little higher short term, but we'll see if that's enough to take it out of the upper echelons of the pennant. So a lot of people have bought into the buy silver thing because in a year from now you'll be able to buy a house with it or something like that. And the situation is a lot of people got into it at a pretty high price when they were talking about that around 26, and now we're at 21. So just follow the technicals if you want to get into silver. And I'm not saying silver's bad, okay? I'm not saying that at all. But I'm just saying wait for a breakout here. Let's make sure we have a breakout before getting in it, and your money won't be sitting stagnant for that long. All right, but I do think silver going forward probably is going to be pretty good, but I just don't think you need to be all hyped up about it and rush into it without looking at the technicals. In other words, you're not going to miss it. All right, so here's gold here. We've got green PTFs on all 3 time frames. We were looking at a pullback here. We got it. All right, and now we're going back up. So more highs on gold coming. Okay. This will be when the next major super high on this will be way up, I think. Let me just see what I got on the weekly chart here. This was the, let me just spread that out so you can see it better. So this was the 2011 wave 3 high here, wave 4, but look at how long this stuff takes to unwind. It's 5 years, and now we're going up with one more high here, I think. So I think probably gold will go up one more high. It may stay a little bit bracketed in terms of after it makes one more high quickly here because we have that green PTF on the 60. I do think, and the daily, I do think maybe it could go brackish or sideways until the market eventually sells off. All right, so, and there's many, there's Coinbase, there's RIOT as well. And then also too, one last thing, and then I'll get to some of the ones here you're putting up there. CBT, all right, is the ETF that we usually look at for the housing market. And, you can certainly see that's deteriorated quite a bit. Still technically going down. I think it's due for a rebound. I say that for a variety of reasons. One is you've got some green here. Okay, and this low so far is holding, so it looks like one more high up here. So you're probably going to get some form of a rebound here. I would say between something like that area there. So I wouldn't be surprised if you see some type of rebound in the housing market ETF into the 93 to 100 range. But then I would expect another leg down. This is red, okay, that could stay red during the entire move up, and now this is red. So brief maybe pause due to maybe lower interest rates, and then if the market sells off, when I look at something like this and we talk about what the market's going to do, this is not done yet. So it's still coming down. When you take a look at the Case-Shiller index that I showed you, there's a wide gap still. And when you take a look at the stock market, there's the possibility or more probability of a significant sell-off. So when you tie all these things together, we may see a little bit of a relief short-term followed by something significant on the downside later on. And they're all kind of lining up for that. So that's kind of interesting. All right, let me see. Oh, UNG. Let's take a look at UNG. That's a good one. Thanks, Frank. All right, gas. Gas has made a new bottom, okay? So we got stopped out, all right? And so did everybody else, I think. So it looked pretty good there. We didn't really have a PTF, but we went on the fact that possible bottom here. So we're gonna watch this thing. So we're gonna try for a long position again, but not until we see a recovery. This thing is still coming down, which kind of is quite interesting. So this had all the looks of a bottoming pattern here. All right, but here we come down. So we'll see what happens with this. We're just going to stay on the sidelines here. Don't go short. It's too late to go short. Stay on the sidelines here, and let's see how much further this goes down and then we got to wait for bullishness to come back for us to see that technically. All right, BYRN, let's see what we got here for you, BRYND. Al, I'm just going to do one for you today because of the fact we're running over time, okay? All right, whoop, it would help if I typed that incorrect, right? BYND. Okay. All right, so nice one here to keep an eye on. Love this. Al, good job finding one that certainly has sold off, okay? Because you're like me, you like to look for bottoms. It's not quite in yet, all right? 60 minutes taking a little bit long to load, but the PTF is still red on the PTF for the 1 minute chart. So we got to be a little careful about that, okay? So give it a little more time. Bring the others to Stock Analysis Friday, okay, Al? And I'll look those up for you there. All right, well, any last minute questions? Don't forget we have the client support today in about a half an hour, so I'm getting prepared for that. And if you have any questions on software or anything, let us know. And there you have it, okay?
Ellie has one.
All right, let me fit one more in for you. NVDA. Let's see what we got. All right, so NVIDIA, you know, we've looked at this many, many times in the past, and of course, what a trend up it's been over the last year, right? So at this point, what do? Well, we kind of made, you know, we're kind of obviously setting up for bearish divergence here. I think we made a slight new high here. All right, we're probably going to go up a little further. But again, this is getting very mature, very toppy. So, you know, again, is it risky to go in here, or is it more risky to go in down here? Here, right? Okay, so at this particular point, I don't think if you're not in it, I don't think I'd go in it at this point. Wait for some profit taking, significant profit taking to come in. Even if you get one more high, I'm thinking if you draw in some fib retracements at these levels here, you're looking at getting into the 300s again during the next major correction on this, and you will get that. You might not get it right away, but you'll get it probably within the next few months. But you'll also probably get another high in the next few months. But, you know, so I think if you're in it at this particular point, have a point where you get out if things deteriorate, okay? All right, so let's see what we got. So true, Gene. Excellent. Okay, everyone, both Gene and I, of course, want to wish you a very happy Thanksgiving. That's a nice statement there, Gene. Okay. All right. Well, thank you for everything, for being here today, and all your good wishes out there. And thank you also, Frank, for your messages here. I see that. Okay, so I appreciate that. And I'm going through to see if I missed any last minute things. I don't think so. Okay, but don't forget about Stock Analysis Friday, because Stock Analysis Friday is designed to look up stocks. And, you know, we're there anywhere. You know, I think we were there for an hour and 20 minutes last week as we went through all of them. So we do that, and then we post the winners on YouTube as well. So definitely check us out there. All right, Marone, good to see you too, everybody. All right, so have a great Thanksgiving and a safe Thanksgiving, and we'll see you back here next week. And we are going to do Stock Analysis Friday once again on Friday. So we'll see you then. All right, take care. Gene, I'm going to turn it back over to you.
Terrific. All right. Well, we are so thankful for all of you, and we really want you to have a super Thanksgiving. And yes, we will be here for Stock Analysis Friday. So I am posting the link for that. And there you go. Oh, Ellie wants a recipe for Jean's famous stuffing. Ellie, I will send that to you. There you go. Yes, indeed. And have a wonderful holiday and Thanksgiving, and we'll see you on Friday. Bye now.
And just so you know, Jean's Thanksgiving stuffing is really good. So I recommend everybody asking her for a recipe.
Oh.